Just a few days ago, we've witnessed that Iranian attacks have knocked out 17% of Qatar's liquefied natural gas export capacity, causing an estimated 20 billion in lost annual revenue and threatening supplies to Europe and Asia. And that is exactly what this chart is showing you. You do see that in the last 14 months, we've seen that of liquefied natural gas coming from the Gulf nations, 195 million cubic meters has actually been shipped from Qatar, and it has actually been primarily shipped to Asian markets like China, India, and Taiwan, and also European markets. Now, you do not really see that American markets are on this list of importers, and that might be one of the reasons we haven't really seen those supply disruptions actually being reflected in the natural gas prices here on the New York Mercantile Exchange. But in today's video, we discuss why this has actually happened and what might be happening next to natural gas prices, because we are currently seeing that consolidation in this high volume area. We're also seeing this upwards trend here at cumulative volume delta, which has actually turned positive in the last few days. And so we're having this symmetrical structure here. We're having this really important support at around $3. And that is really important, but it does not give you the answer on the question whether we're about to see a move here to the upside or to the downside. And so really to understand those markets even more, we have to take a look at the cycles, because natural gas is in fact moving in cycles. And so if you don't want to miss those videos in the future, don't hesitate to hit the like button, subscribe, and also don't hesitate to ask questions or just give us your opinion down in the comments. Thanks for your support. Now, let's have a look at the cycles of natural gas, because natural gas is in fact moving in cycles, and we do tend to see highs, lows, highs, lows. They do actually interfere, and we can see that they all have a typical pattern, also concerning the gold to oil ratio and the stochastic RSI. Now, let's first have a look at the empirical evidence. We do have marked this top here in 2000, the dot-com bubble high, and then we've seen that low here in 2001 after the bubble bursted. Now, what is always happening quite similarly is the fact that we do see, as we are seeing those bubbles forming out, that actually coincide to a divergence happening with the gold to oil ratio. In other words, before those tops have been in the last few times, we've actually seen that coincide to a divergence where natural gas prices have moved to the upside and the gold to oil ratio has been moving to the downside. Now, why is this happening? Well, we tend to see that oil prices are actually outperforming gold prices. This is exactly why we are seeing this ratio fall. Now, this is really interesting because we're seeing it happen once again right now, and it really beautifully fits into the pattern. And then ultimately, when the crash is starting, we tend to see this ratio reverse to the upside once again. And we've seen that actually play out exactly like this throughout history. We've seen those divergences, and then we've seen that the natural gas prices plummeted and the gold to oil ratio most of the time actually has risen. We've seen that here in with the dot-com bubble. We've seen it happen here in 2003, in 2005, in 2008, in 2014, in 2018, in 2022, and we might just see it happen once again. And in fact, in the last few years, we've actually seen something interesting happening, which is we are seeing double tops at the stochastic RSI, coinciding to a lower high at the natural gas prices, then followed by a higher high. And so you can see that this 100 mark has been retested twice after we've seen, or before we've seen a bigger sell-off happening here at natural gas prices. We've had those two retests here in 2013. We've had them here back in 2018 and before in 2016, which actually also marked this lower high and this higher high. We've seen those formations also here in 2021. Lower high, higher high, two retest of this 100 mark at the stochastic RSI. And we're seeing it happen once again. We've seen that lower high, that higher high. We've seen 2 retests of the 100 mark. And so this empirical evidence would actually argue that we could actually have seen the high being in at natural gas here back in the end of January of 2026. Now, this would actually beautifully fit into the pattern. We do have a lower high, a higher high, a double retest of the 100 mark at the stochastic RSI, as well as a divergence which is currently unfolding between the gold to oil ratio as we're seeing the war in the Gulf region. And obviously we do see this divergence now where natural gas prices are still in this upwards rally, but we're seeing that this ratio has already declined significantly. But we expect this to reverse quite soon as we are seeing a deflationary crash. We certainly project a crash happening in 2026. Now, it's obviously quite hard to predict this in time, but you can see that just from the empirical perspective, the last few times we've seen those ratios and those indicators behave like they are currently doing, the last few times we've seen that happening, that actually always led to a sell-off. And that is exactly what we believe is going to happen here, especially considering the fact that we haven't really seen those supply disruptions impact the American markets, in this case especially. We have seen that the European and Asian natural gas prices have actually spiked even more because of the dependency of those regions from the Gulf region oil. Now, we haven't really seen that happening to the American prices because obviously they are not so dependent on this region. But we expect that that could actually also impact those markets because of any reason. And also concerning what we are seeing happening to the oil prices, the American prices have certainly also been impacted. Now, this could all play out in the short term. The short term is always really hard to predict. We are currently seeing that the high volume area is still being retested. And so this is really acting like a magnet. And so you have to understand that until we do actually see a breakout here to any of those two sides, there certainly has to be a decision being made right now. But as we are seeing that cumulative volume delta is actually currently strengthening, as we are still seeing no real decision being made, the odds are certainly likelier for a upside move in our eyes because of the fact that we're still seeing those supply disruptions that might also impact those prices here. But also because of the fact that we are seeing bias aggression actually strengthening in the recent days. We are seeing that we certainly have some resistances that we could take out here, and we could certainly have a bullish rally in the next few days and weeks and months. But concerning the long term here at natural gas, we are rather bearish because of the empirical data that we've just assessed concerning those past few cycles. And we believe a deflationary crash is more than overdue in 2026. And so that is our final conclusion. That is our thesis here at Chronos. If you appreciate this video, don't hesitate to hit the like button, subscribe, and also write a nice comment down below. Thanks for your support. See you the next time. Bye bye.